Are you a first-time home buyer considering using an FHA loan to purchase a home? You're wondering about the good versus the bad, the pros versus the cons of using FHA? Well, in today's video, we're going to dive into those details. We're going to go over the pros, and then we're going to go over the cons at the same time so that you can make an informed decision whether or not it's the right loan for you. Now, if you search out there on the internet about FHA loans, there's a lot of people saying that FHA loans are bad loans, that you should never use them, and that's simply not true. But I do want to talk about the cons, the downsides to it, because you should know those. It's not all positive. It's not all rose-colored sunglasses, if you will. And it's good to know the negatives versus the positives just to find out if it's the right loan for you. And the very first thing I want to start with today, and is probably the biggest benefit of using an FHA loan, is the fact that they only require a 3.5% down payment. So only 3.5% down. That means if you're purchasing a $100,000 home, $3,500, $200,000 home, $7,000, $300,000, $10,500, and the list goes up, right? So you don't need a huge down payment in order to use an FHA loan. But the downside, especially in the housing market that we're in at the moment, is that a lot of sellers frown upon FHA loans. Why? You're probably asking. It's because of the minimal down payment. Now, if you're in an area, a market where there's a lot of FHA loans, it might not be as big of a deal. But here in Southern California, if you have an FHA loan, a lot of times you're competing against borrowers putting 5, 10, 20% down in some cases, and it's really hard to compete. Now, I often get buyers asking me, why does the seller care about how much money I'm putting down? If the money's coming from the bank, if I've been pre-approved, why does the seller really care about my down payment? It's because there's a misconception. The seller thinks the person that puts the most money down is typically the most qualified. And that's actually not true in a lot of cases. But perception is reality in a lot of ways. And therefore, when you're competing or trying to compete using an FHA loan, even though it's a benefit to you, the seller might look at that as a negative, which might keep you from being able to buy a house in this market. The next thing I want to talk about is credit scores. FHA allows lower credit scores and lower down payments, like I mentioned earlier, in order to buy a home. And they go down as low as a 500 credit score when putting 10% down. Now, if you have a 580 credit score or above, their requirement is only 3.5% down with regards to the down payment. Now here's the downside. The downside is a lot of the lenders out there have overlays on their programs. So even though FHA allows those lower credit scores, the lenders out there have these overlays which says even though only a 580 is required, we're going to require you have at least a 640 credit score because we only want to do loans with certain credit scores and higher for protection to make sure there's no default and what have you, right? It's a better loan to sell on the secondary market, if you will. And therefore, they don't do the loans with the lower credit scores. And because of that, the pro of having the low credit scores and doing FHA is kind of negated, if you will, because a lot of the lenders out there don't do them. But keyword there is a lot, not all. So you can still find lenders out there that will do the lower credit scores. You just have to do, some research and find out. Now, if you're looking for a lender that does all types of FHA loans, I'm putting a link in the description below so that you can try to find somebody that can help you. But just keep in mind, just because you have the lower credit scores and you meet those guidelines doesn't necessarily mean you're going to be able to find a lender to do it. And that's a huge con. Now, another huge benefit of using FHA is that it's probably the most lenient of any loan program out there. What does that mean? Well, like I mentioned earlier, they have lower down payments required. They allow lower credit scores as well, but they're also the most lenient with regards to their guidelines. They let you use more of your income towards debt with regards to qualifying for a home, whereas conventional financing requires a much lower debt to income ratio. Now you might be wondering what I'm talking about. FHA doesn't have a minimum income requirement, but they do have a max debt to income requirement. So what that means is it doesn't matter how much income you make. What matters is how much debt you have per month versus that income. And they will go as high as a 57% debt to income ratio, which means that you can use 57% of your gross monthly income towards debt. Now, keep in mind that does include car payments, credit cards, student loans, any installment type loans that you have, plus the mortgage payment can't be more than 57%. So an example here would be if you make $10,000 per month, you can't spend more than $5,700 per month going towards that debt. That would be mortgage payment, taxes and insurance, any car payments, student loans, credit cards, that stuff, like I mentioned earlier. So they're a lot more flexible because conventional financing would cap you at about 45% in most cases, especially if you had lower credit scores. So FHA, that's a huge plus when using FHA loans. So if you have debt, you have lower credit scores, you only have a lower down payment, FHA could be a really good loan for you. In fact, I've had several clients over the last couple of years purchase using FHA, and because of where the market's appreciated, they've been able to refinance, get into a conventional loan, get rid of the mortgage insurance, which we're going to talk about here in a minute, because of the amount of equity they've gained. Now, if they waited until they had enough money for a down payment to use a conventional loan, they might have never purchased a home and they might have missed out on the last couple of years of equity. So FHA allowed them to get into a property, maybe not their forever property, but it allowed them to get into the market, gain some equity, and use that equity to either buy another house or refinance and get into a better loan. Now, the pluses I've pretty much talked about, right? The pros, the good of FHA. Now, there's a couple of more of the cons that I do want to mention. And one of those is that FHA only allows owner-occupied purchases. So you can't use an FHA loan and buy an investment property, right? You have to live in the property. Now, I often get people reaching out, well, what if you live in the property for a period of time and then you turn it into a rental? That's allowed, right? You can live in it for, say, a year and then turn that property into a rental. You do sign an owner occupancy affidavit when you sign your loan document, say that you're going to occupy that property. And after you live in that property for X amount of time, you can turn it into a rental. But in order to get the loan, it does have to be owner occupied. Now, another downside to using FHA loans is that they have a mortgage insurance premium. Now, you've probably heard of PMI, right? Mortgage insurance. When you put less than 20% down when you're buying a house, they require mortgage insurance. And essentially what that insurance does is it protects the lender against default, right? When you put less money down, you're a higher risk client, if you will, borrower, if you will, and they have to insure themselves some way. So they charge this mortgage insurance. And FHA has something called a mortgage insurance premium. So not only do they charge mortgage insurance every single month like you would get on a conventional loan putting less than 20% down, they also charge an upfront mortgage insurance premium. So this is something that's charged on every single FHA loan, regardless of when you're getting it, how you're getting it, you're going to pay an upfront mortgage insurance premium, even if you have 20% down, even if you're putting 20% down, which in most cases you wouldn't be using an FHA loan, you're going to have this mortgage insurance premium upfront, and it's 1.75% of the amount financed. So if you're financing $300,000, you're going to finance an additional $5,250 on top of that $300,000 loan amount because of that mortgage insurance premium. And that's a downside, right? Because that essentially eats up half your down payment, if you will, or pretty close to it if you were putting 3.5% down. But unfortunately, there's no way to get around it. Now, I often have people reaching out saying, well, can I get rid of the mortgage insurance? Yeah, you can get rid of the mortgage insurance, refinance into a conventional loan at some point if you want. But as long as you keep an FHA loan, you're going to have mortgage insurance every single month on that loan. Now, if you put 10% down, it does fall off after the 11th year, but most people putting 10% down aren't using an FHA loan. So just keep in mind that mortgage insurance premium is a negative when using FHA loans because you're financing a little bit more than you have to because of FHA. Now, with that said, a pro of the mortgage insurance is that the premiums per month are typically much lower than those of conventional loans, especially if you have lower credit scores. So if you're going to have mortgage insurance anyway, right, whether it's a conventional loan or an FHA loan, you might have somebody run the numbers on both to see which loan program is right for you. Even if you do have to pay that mortgage insurance premium up front, because of the lower monthly rates, it could end up being a better loan than conventional because of the lower monthly mortgage insurance premiums that you pay on FHA. And the last negative I want to mention, or the last con, if you will, with regards to FHA, is that they require condos be approved. So if you're purchasing a condo, it has to be FHA approved. Now, what does that mean? Well, it has to meet certain requirements by FHA in order for them to allow financing on it. Now, I will put a link in the description below so that you can go check the condos that you might be looking at in your market to find out if they're FHA approved, because not every condo out there is. In fact, a lot of them are not, because they don't meet the requirements that FHA allows. Now, there are certain ways around it. You can do a spot approval occasionally and get, one unit in a condo building approved. You can also try to get the entire building approved, but that's for another video. I'm not going to talk about that here. But one of the negatives, again, of using FHA and buying condos is that those condos have to meet the requirements that FHA allows, and it has to be approved. And the last negative con that we're going to talk about with regards to FHA is that they have loan limit restrictions. So depending on where you're located, you might have a certain limit on how much you can borrow using an FHA loan. And that's a negative, right? Because you might be able to qualify for much more home. You might want to purchase more home than FHA allows. But unfortunately, if you're using FHA, they do limit you on how much you can borrow. Now, if you're wondering how much that is, again, I'll put another link in the description below so you can check that out and put in your area to see what the loan limits are. But those are really the negatives. Now, if you're thinking, after watching this, there's a lot more negatives than there are pros or positives, if you will, let me help you, because the pros outweigh the negatives in many ways, right? The fact that you can go with lower credit scores, put a lower down payment, you have lower monthly mortgage insurance premiums, and the loan is more lenient with regards to qualifying, typically outweighs the negatives that I mentioned. So you have to determine whether or not it's the right loan for you. I can't make that decision for you, but I just wanted to lay those out to help you understand. Now, do me a favor. If you're finding any value in this content at all, hit the thumbs up, help more people see it. And if you like information like this, feel free to subscribe to my channel. I like to update people on the home buying process, keep you, in the loop of what's going on and informed so that you can make the best decision for yourself. But if you're watching this video and you're wondering, can I even qualify for an FHA loan? How do I go through that process? Do me a favor, check out this video here. I dive into it in a lot more detail. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.